Hello, everyone. Welcome to Tech Talks Season 1, Episode 2. And the topic for today is FinTech and financial inclusivity in Pakistan. We have our esteemed guest who basically are well accomplished people in their own fields. We have Areej, we have Farooq, we have Ali. So now what I would do is that basically I would want my guests to introduce themselves and talk a little bit about their own journey so far, and then we're going to get into very interesting discussion, which will be focused on how the fintech is contributing to the financial inclusion and digitization in Pakistan. So over to you, Areej, if you can please introduce yourself.
So I'm Areej, and I'm with the team at Sadapay, which is a fintech startup in Pakistan. We have a digital wallet, and as the name suggests, we're bringing financial transactions to you in a Sada way. So that's a simple way. My own background is heavily in tech. I'm an electrical engineer according to my bachelor's degree, and then I moved on to do a master's in entrepreneurship and innovation. So for me, it's very, very important that we bring convenience through tech and we solve problems that exist around us through innovative, convenient, and technological ways. Another thing which is very important for this webinar is inclusion. And that is also something which is very close to me because my own career as an entrepreneur started through Connect Here, which is a startup bringing deaf inclusion to the Pakistani society. So I was a co-founder at Connect Here up until 2019, and that's when I firsthand saw the importance of inclusion for different segments of the society and the difficulties that marginalized people have to go through in very basic things that you and I take for granted. So bringing everything together, I think I found my niche in fintech and especially in inclusive fintech, and that's what we'll be talking about today.
Thank you, Areej. By the way, you have so much experience that looking at you doesn't feel like that your age basically corresponds to that. So, mashallah, like that's really, as I said, like my guests are very well accomplished people here. Farooq, I'll hand it over to you now.
Uh, Thanks, Yasir. Yeah, so my name is Farooq. I'm the founder and CEO of Elephant Stone. We are a wealth management platform for the Pakistani market. Yeah, I've been prior to starting Elephant Stone, which we really started working on it in 2021. Prior to that, I'd been working for about 12 years in both financial services and a little bit of financial journalism in both Pakistan and the US. So I had a lot of different experiences. It seems like I'm the hardened capitalist in this group. I'm very much all about like, let's just make a profitable business, and over time, you'll end up helping people by making a business that is self-sustaining.
Yeah.
So that's kind of the approach that I come from on this.
So basically, like we will have questions ready for you in a more capitalistic way. So all those questions are coming your way.
Sounds good.
And now Ali, basically an entrepreneur in his capacity. I've known Ali out of basically there's some interactions that we had together. I have heard a lot about you, Ali, in terms of managing projects and delivering results. So I would let you introduce yourself.
Yeah, so thanks for the opportunity. So I'm Ali Ladhubhai, co-founder and chief operating officer for Abhi. Abhi is Pakistan's first financial wellness platform, providing earned wage access to company employees, allowing them to meet or bridge any expenses that they have before the next payroll date. By virtue of profession, I'm an ex-banker with just over 10 years of experience in retail banking. I've also had the opportunity to run a startup before as a co-founder, which was a financial aggregation platform, and then also as a director of business development for a payments business. So I've been sort of part of the ecosystem for just over 7 to 8 years now, and have seen the ups and downs of it. Alhamdulillah, Pakistan now stands at the sort of forefront of financial inclusion in fintech, and I think it's a great time for us to be talking about this.
Thank you, Ali. So for my audience, I would like to say that, if I were the audience and I was listening to these three people, I would be very interested in, the discussion and how, because this is something, as an insight you'll be getting from these people is something which is hands-on. These people are involved with the financial inclusion in their own capacities, so it would be a very interesting understanding of the whole concept of financial inclusion, how it's going in Pakistan, and what is the future for financial inclusion in Pakistan. So, Areej, I'm going to start with you. When I was hearing your introduction, you mentioned about your contribution in this area as well, and I believe it's very close to your heart, and the way I heard you speak. So, exactly for the audience, for the wider audience to understand, what exactly is financial inclusivity? Is it good? Is it bad? Why should one even think about financial inclusion in Pakistan?
For me, financial inclusion is accessible financial instruments and generally products and services in the finance industry. What accessibility means is that it should be simple for everyone to understand, regardless of wherever they're coming from. It should be easy to navigate, and it should be sustainable. It should be maybe free or maybe affordable. So, from a perspective that if tomorrow a person who has no bank account wants to sign up for one, it's easy for them to figure out how do they sign up for one, how do they use one, and how do they make the most out of it. If someone has a bank account but they want to switch to better services, it's easy for them to switch. It's also about when they're using it, it's easy for them to navigate through it. There is transparency in what they're using. They have trust on the product and services they're using. And generally, the whole experience is very seamless and simple for them, so that they don't have any inhibition when they're thinking about switching from, let's say, cash to a digital platform. So it's a lot of things, but for me, I think financial inclusion is just accessibility to financial products and services so that it's easy for them, for everyone to use.
So basically, if I picked up what you have said, so there are two areas which are seemingly the hindrances towards financial inclusion, and one you rightly said is the affordability. So it should be as affordable as cash, right? So, and the switching costs, if you will, shouldn't be higher. So if I'm paying something through cash, when I'm moving to, let's say, any digitized mode of payment, it should be as cost effective as cash, which is zero cost, right? So we need to be moving in that direction.
So the cost in a in terms of navigating and understanding the product and service itself. So no financial jargon, easy for a layman to understand. Uh, and just that when you look at something, you automatically know that, okay, this is what I click to do this, and this is what I tap to do that. So nothing which confuses a person when they're using a financial product or service.
Absolutely. And now, Farooq, because you're looking at it from a more capitalistic point of view, so where do you think, like, because as a capitalist, I would think that I would like to see where we were 5 years ago, where we are heading in terms of financial inclusion in Pakistan, in terms of the fintech and the financial industry. What's your view in from the looking at the past 5 years and let's say the future 5 years?
Yeah. So in addition to sort of like my personal perspective, we're also, as a company, we're approaching it from a very specific lens, which is we're trying to sell investment products. So I think Areej's products is a little bit more, um, it has a broader audience than ours, at least for now, in the sense that everyone uses money and cash, etc. And to the extent that Sada Pay can help digitize that, that has a probably on balance a slightly larger audience than ours, which is investments for which we think eventually all of Pakistan will have some form of investments, but at least for now, it's probably a relatively smaller market than a neobank. So having said that, I think. So there's definitely been progress, but it's kind of important to figure out where that progress is coming from. And it comes down to this. The progress in Pakistan in terms of enabling a digital infrastructure that allows more people to access financial services is very, very incomplete. We are nowhere near where we are. I mean, I've talked to people, for example, who are working on the Indian fintech ecosystem, and they are just shocked as to the kind of problems we still have to deal with because they've already had UPI at this point for several years now, and it's just a whole different structure that they're dealing with. I think the progress has come, but it's entirely come from the regulator side. There is somewhat a degree of complacency, and I think even bank CEOs will admit that they have a relatively comfortable business model that allows them to essentially not have to work too hard to continue to grow their businesses and certainly to maintain high levels of profitability. Um, that's not their fault. It's completely rational for them to do so. If you've got a great business going and there's no immediate threats to it, why bother, right? Um, but at the same time, we have to, as fintech players, acknowledge the fact that it is the banks that control the on and off ramps to our products. So, for example, let's say I had a Sada Pay account. Okay, let's say I open up a Sada Pay account. And by the way, Areej, can mine please like be bumped up the wait list? Anyway, let's say I have a Sada Pay account, and how do I get money in and out of that? It'll probably right now at least still be through my HBL or Standard Chartered account, right? So understanding the relationship that the industry has with the incumbents is going to be incredibly important. And I think we as an industry have kind of been focusing on the fact that the regulator has kind of like been really friendly and a little bit on our side in terms of trying to help the disruption, but we need to have a friendlier relationship with the incumbents. I don't think this needs to be an antagonistic relationship. I think it can actually be quite collaborative. I think there are some companies that are already trying that out, and I think for us to move forward as an industry, for us to move forward, frankly, as a country trying to promote financial inclusion, it can't be the banks versus the fintechs. It has to be banks and fintechs versus, cash and real estate and et cetera, and all of the other stuff that people are using.
That's very interesting because I was at Temenos Community Forum last week at London, and there was a very interesting, line that someone said, and I really liked it. They said like there was in the infancy stage, all the fintechs wanted to act like banks, and now all the banks want to act like fintechs. So very rightly said. So rather than seeing each other as competition, they need to see the problem at hand and work together to solve it. So very good point on that.
Yeah.
So basically, when we're looking at all that, as the discussion is evolving, Ali, like, what's your input on, like, so far? So we have talked about the fintech in general as a concept. We have talked about where we were 5 years ago, or how the Pakistani market is evolving as the fintech and the traditional banks. And so, how do you see you yourself? Are creating such new opportunities in the economy, in the industry, right? So, how do you see the contribution of fintech to the economy currently, and as we go past few years, or let's say last 2 years, most importantly, we see that there have been a lot of positive vibes coming from the fintechs, right? How do you see yourself the contributions of fintech to the economy?
So yeah, so a couple of things. The first, I think, looking at how the ecosystem has evolved, banks are now starting to understand, and Farooq rightly sort of pointed out that fintechs and banks both understand that both of them sort of work in conjunction, and things that a conventional bank may not be able to do, fintechs can assist them in actually being able to reach out to that kind of audience. I think from our perspective, a proof of that is our collaboration with three of the largest consumer banks in the country, who have opened sort of their doors and said, hey, let's try and deliver a more seamless product experience, at least on the credit side, through us to customers that they are servicing. So I think that's very welcome, as opposed to where we were a couple of years ago, where banks and fintechs were looking at each other eye to eye and saying, "I'm here to disrupt." I think now the understanding from an ecosystem perspective is much much more sort of cemented, where both of them see each other as a complementary service. Also, I think this shift in mindset has also come from the regulator, where both, whether it is the State Bank of Pakistan or the SACP, have been very open to the idea of collaboration between both kinds of financial institutions, and accepting new models for the ecosystem to explore. So that's definitely there, and I think that contribution, I think, cements itself, where us as Abi, if I was to talk about particularly, we were able to give credit to customers who were banked customers, but most conventional banks were not comfortable underwriting them. So we bought in a model where they were, we made sure that we could assist them, provide them access to credit, and overall improve, their livelihood, whether it is the employee or whether it is the merchant that we service. So I think the trajectory is definitely in the right direction. Nothing changes overnight, but we are moving leaps and bounds. And I think in a couple of years, where India is today, we should have covered up and reached a very significant point there.
No, thank you. I think that you made a very good point about the regulators, and I think like for the past 2 years, if you will, we have seen a very positive role coming from the regulators. So the push from the regulator, I think, is very important, and understanding what a target is. So if our target is to as Farooq was mentioning, that we are way behind in this race. So what are the steps that we need to take to catch up? That's the first thing. And the regulator role becomes key in this, so that people like yourself can easily move in that direction. So the move will come from you, all the hard work will be done by you, but that support of regulators is very important. Totally agreed. So now, like as we're moving towards this, the because our focus is Pakistan, right? So Areej, how do you see, like the how's the fintech helping financial inclusion in Pakistan? In a broader sense.
I think from a very basic perspective, we know that there is around 70 to 80% smartphone penetration, and exactly opposite of that, we have around 20% banking penetration. So around 80% of our population is still unbanked. And I think that's how Pay also came into inception. But generally, that's how a lot of fintechs are coming into the space, because we want to benefit from the smartphone penetration and bring financial products to people on their phones. It's definitely much more simpler because it takes out a lot of redundant logistic processes. I'll talk from, again, more of a banking slash digital wallet perspective, that when you step into a bank, you're just very kind of, there's a lot of cluster over there, and you just get into that hassle of all the documentation, bringing forward all your documents, all the proofs. And then there is a long wait time. So very little automation from that perspective. And we want to speed that up. We want that if a user says that they want a bank account right now, they get it right now. And if they want a card, they get a card within a couple of days. So I think from that perspective, it's bringing a lot of ease, a lot of it's fastening up the whole process of people getting bank accounts, starting to use them, making transactions, and all that logistical processes which traditional banks have kind of scare away the people from actually going and opening up a bank account, because half the time they don't have the right documentation. Half the time they wouldn't have legal documents of where they're living or where they're working. So we think from a very broader perspective that bank accounts are no longer a privilege. They are a necessity. And if they're a necessity, then you have a lot of people who don't have those requirements which a traditional bank requires. So it's from that perspective that fintechs are bringing a lot of inclusion into the market. We don't care if a person is hired at a reputable place. If we don't care if a person is a student, we don't care if a person is a housewife. So we're bringing that inclusion in terms of financial products and services to a lot of people, and that's mainly through tech. So that's how I see that fintech is penetrating the Pakistani ecosystem by bringing by reducing a lot of friction in all the processes which usual banks have.
Totally agreed. Basically, like in my view and my projection is so that like in future, say like by 2025 or even beyond that, I'm not talking about Pakistan, but globally, banking would turn into service. So you wouldn't be basically having banks. Rather, when you are at that moment of truth where you're transacting, there will be a banking service which will be affiliated with that transaction rather than with you. So this is, I think, like this is how it's going to evolve into. But it also leads us to two main areas. One is the literacy part. So, the awareness, the literacy is something very important. The other one is the risk part. So, unless this awareness is there that people feel comfortable in transacting in this way through, say, like the mobile phone you mentioned, right? So, where the fintechs are trying to make it easier for and removing all the bureaucracy or red tapes for getting the account and being able to help them with the financial inclusion. But there is a risk that people at least perceive risk that people see with the use of technology like payment on the mobile phone. But I'll give you a very quick example about myself that I was like, there's a guy who basically works on in the rural areas, and he basically called me and he said, like, please send me the ED. They need ED. So my cousin goes to this place where he owns this land, and we go there once in a while. So I said, don't worry, I'll give him your ED and he will bring it to you. So he said, no, 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 don't do that. I'm giving you my mobile number, just transfer the money to me. And I was surprised that this guy's living in the rural areas and he's so much aware of, the possibilities. But let me ask this now. I would like to, for the audience to understand the literacy part and also the risk part. So, Farooq, if I may ask you, like from the literacy perspective, uh, where do you where do you see Pakistan in terms of financial literacy?
Yeah, so this is the part where I think I'm going to have a very different perspective than a lot of other people, which is I honestly don't think that financial literacy and programs that rely on improving financial literacy are even important. You don't even need them. Because here's why. Because we as people who are college educated, et cetera, live in the urban areas, have grown up in upper middle class areas, have a tendency to have a very patronizing attitude towards people who are maybe working class, maybe live in rural areas, et cetera. We think that they don't understand and that we need to explain to them. No, we don't. They're completely sophisticated people. They know their self-interest. Every human being knows their self-interest. And if they see a product that works for their needs, they will start using it. It's as simple as that. And so all we need to do is create that product that is simple and easy to use and meets their needs. That's it. That's all we need to do. And if we do that, then we will, I think, get to the point where people will start using these products, where people will start converting away from cash, people will start using more electronic payments, etc. If you need to explain your product, you have built a bad product. You need to build something better. And so that's basically, I think, the approach that should be is understand how people use money in their daily lives, figure out how you can make it easier. And if you do, the language they speak, the none of that will end up being a barrier. I mean, illiterate people in Pakistan use cash denominations every single day. How do they tell the difference between a 100 rupee note and a 5,000 rupee note, etc.? They make do. They know how to get things done. So making assumptions on I need to teach my audience is not something that we should do. Just build something that they'll like, and I think we'll get there. And on that front, I think the core sort of effort should be just make to Areej's point, ease of use. Just focus on ease of use. Focus on making sure that people don't have to provide 1,000 different documents for a simple transaction, and we're going to get there.
No, and I think like that example of the ED that that guy asked me
Exactly.
is the best example of what you're
Yeah.
saying. So it basically like our assumptions are wrong, in terms of how we create this awareness. I think they are aware, and I think they understand their interest really well. However, having said that, there is always a risk that goes, hand in hand with this evolution that we are going through. So I mean, like if I think about the risk, right? So when, for example, Areej mentioned using mobile phones for the financial transactions, and so if we are thinking of those kind of transactions, laws, for example, if you're sitting in US, for example, there are a lot of different laws that protects you, right? Whereas in Pakistan, there's always a risk of losing your financial confidentiality, if you will, right? So, like, how do you see this? Is there a risk of using a fintech solution? And if so, are people aware of it and they are, looking? So I'll give you an example. Like where I remember, like when I was living in the US, every document that I was throwing in the trash bin, I used to shred it, right? Because I knew that people were smart enough to steal your identity and all that, right? Whereas in Pakistan, you might not have that problem. This problem will come with time. And with the evolution that we are going through, this risk will increase and people will start feeling it more than they're feeling it today. So, Ali, your take on the risk associated with uh, with the financial inclusion?
So risk is definitely there, and I think it's not just fintechs but banks also that will face this. And I think both types of institutions need to really gear up to have the relevant security parameters in place for them to be able to sort of mitigate against this. I think a lot of banks are making a lot of efforts as far as their own customers are concerned on trying to educate them of not sharing their financial identity or their transaction identity. But how we at Abhi sort of look at it is that we understand the profile of customer that is using the service. So therefore, we have to make sure that we do not allow for them to be able to go into an area that could be risky for them. So for example, we as Abhi could allow for a customer to be able to take out money and send the money to, let's say, a friend through the service that we have. But we will only open it up once we've seen the customer has transacted, understood, and seen the behavior on how they are using that certain application. So, sort of guiding them in the right direction. I think it's a responsibility of the fintech to be able to do that, to make sure that the customer is being given enough of freedom where they can transact, but yet don't sort of go into an area that could become a problem for them. So we make sure that initial transactions are only happening in their own bank account. So making sure that those protective measures are in place where we are taking the bank account from the employer themselves and plugging it in, so that whenever they transact, maximum what can happen is, even if there is a breach, even if they've given up their identity pin to somebody else, the maximum that can happen is the money can go into their own account. So that's sort of how we look at it. But definitely there is a concern there. But I would like to sort of talk about the general ecosystem in Pakistan. Again, the regulator has taken a very good stance where on the plastic side, for example, they've made chip and pin cards mandatory for transactions and so forth. That really sort of reduces the risk there. And generally, I think for the consumption of the audience, financial fraud in Western countries is more prevalent than it is in Pakistan. We think
Yeah.
that it is, and I don't have the numbers at hand, but back when I was in the banking system, a credit card fraud in Pakistan was less likely to happen than in the US or anywhere any other sort of developed economy. So measures need to be taken, but we are all right. And I think continuous sort of security measures need to be put in place by both the banks and the fintechs.
Yeah,
To your
and
point,
I
Ali, sorry, if I can just quickly jump in
sure.
to Ali's point, I would very much like for there to be enough credit cards in Pakistan for there to be a large fraud problem. Like right now, we don't have cards, therefore we don't have a fraud problem.
Yeah.
Um, so, So I think we're overcorrecting maybe a little bit
Sure.
by
Yeah.
just not offering the service.
No, no,
Yeah,
agreed.
but as I've heard you guys that this problem basically exists once you have that kind of financial inclusion. So we haven't reached that stage. So it's kind of an opportunity for us to think forward and make sure that those mistakes that were that existed in those economies, we don't repeat those mistakes, or we don't go through the same learning curve, as I understand from what Ali have said. And the fintechs in Pakistan are doing it. So, they are looking into, rather than going through the learning curve, they're making use of the risks that already existed and addressing them as we go on. And there can be an evolution in the role of regulators as well, right?
Yeah. So,
I think
just to your point, I think what I'm suggesting is a happy balance. So, don't jump face first, but and you have learnings from other markets. I think and we are at a nascent stage, so putting those measures in place would not hurt anyone, but obviously not overly complicating it. So, the happy balance needs to be there.
Yeah.
I think from
Areej?
yeah, from our perspective, I would see it as the responsibility is kind of in three entities. So one is the regulator, and for example, for us, we have an incoming limit of digital wallets set at around 2 lakh PKR per month at maximum. And that's how the regulator is trying to control how much risk is affordable at this point. I agree with Farooq that we're still being a little too conservative, but it's okay to tread in a sequential manner and keep, increasing our appetite for risk eventually. The same is for contactless payments. So chipless payments are capped at a certain amount. If you have anything more than that, you have to enter your card and put in your PIN. Then the second responsibility is on the fintech itself. So at SaudaPay, for example, we have the first numberless cards, and I think that's a great way to minimize the risk of fraud or like your credentials being leaked from your physical cards, which is something that we have seen quite a lot happening in a lot of different countries. Um, and then the third thing is on the user. So at SaudaPay, we try to give as much control to the user as we can because every user has a different risk for appetite as well.
Yeah.
And just having toggles for different types of transactions. If they want to freeze their card, they can freeze their card, and then they would be at peace that okay, my money is in the wallet, but my card is frozen, so it cannot be used anywhere unless I want to use it and I intentionally unfreeze my card. So I think a lot of this also falls on the user and their personal risk for appetite. We get a lot of queries when they don't get OTPs for e-commerce transactions that why is the bank not asking me for an OTP because that makes my transaction more secure. And we want to convey to the user that the world is moving towards a much more smarter way of securing transactions. So if you don't need an OTP for a two-step authentication, then you shouldn't have to put it in. You should have a more simpler experience for transactions. But we can see that the users themselves are a bit they have their own inhibitions when it comes to trusting and going for a higher amount of risk. So I think it's also important to put some of that control in the user's hand as well.
Yep. So if I summarize this by an analogy, I think like I heard you guys. So let's say if we look at the evolution of television set that we used to have at home. So from black and white to color, the big fat color TV, then the projection screen, then the LED, then the LCD. So if we look at that evolution, and let's suppose that that's a fintech evolution, right? And we are coming at the time when the LED is prevalent. So we are not going to go through the same, route. We will basically make use of where the rest of the world is today, as Areej rightly pointed out, that if OTP is not the right way of securing it, then we look at how people have secured, even in those societies where the fraud was at a highest, level. So, I think that's how I would summarize this. So Arish, like, one thing that I would like to ask you is that being a female yourself, how do you see that, because 50% of our population being female, how do you see the fintechs helping the females? because I personally see that there's a surge in home-based businesses. There's a surge in social. The people are selling. Females I've seen selling products on social media, using Facebook and whatnot. So how do you see the fintechs basically helping the females in Pakistan?
Yeah, so I think as a female myself, I'll be very honest, till I was in Pakistan, back in, I mean, I think I was in Pakistan till around 2020. And the only bank account that I had was the one that my dad had set up in that young savers scheme. And that's the only bank account that I had, which I wasn't even using as a primary means of transactions. So I was mostly relying on cash. And even if I had to, get a bank statement, or I had to get a pay order or something, I would send someone from my house to go to the bank and deal with the people over there, just because banks in their physical form are not gender inclusive. You will enter and you would be lucky if you're able to spot females around you, and definitely not in a majority. Um, Other than that, I think it's also a lot about generally the perception that we've had in terms of financial jargon, that when we sit in a society, there are men talking about finances, women don't usually, and that has created a very huge bias that women are
Sure.
not included in financial matters. So it's hard to catch up as a female. It's hard to catch up and break that bias as well. But when I moved abroad, I realized that, oh, this is pretty simple. I got my bank account within a day, I got my card delivered within 3 days. And since then, I stopped using cash completely. So now all my transactions are on my phone. And that has helped me a lot in terms of budgeting, in terms of saving, in terms of seeing my analytics, in terms of investing. It's created a lot of ease for me as a woman, and the only hindrance to that was the onboarding process, which I did not want to go here to banks and do it. And then second, like we were discussing earlier, that the language was very complicated and it was difficult to navigate through. What terms and conditions am I signing up for? What are the different instruments that I'm signing up for? What are the implications of that? What is the fees behind that? And just bringing all that ease and transparency made me switch within a couple of days. And like a year later, I'm working at a fintech, which I had never imagined that I would step into the finance industry maybe 3 years ago. So I think it's a lot about, again, easing out that friction for women. We see more and more women coming up with their own businesses, but they
Yeah.
rely on either their partner's account or their father's account or their brother's account. And that's not okay, because women also deserve to have control of their own finances. So
Absolutely.
one example of that is that a friend was asking me if it's okay for him to install his SaudaPay app onto his wife's phone so that she can use the SaudaPay card as well. And I was like, why do you want to install your app to your wife's phone? And why can't you just get your wife another account? And he was blown away. He's like, I didn't think of that. And I was shocked that, there are still people who are in our own circles, but they just ignore the perspective that, women can also use banking apps and banking instruments in general. So I think this is something very close to me, just because there was a lot of inconvenience with traditional banks in general. And yeah, I think all women should have control over their finances. It would help them budget, it would help them get empowered, it would help them start businesses. Um, yeah.
So basically, like what I heard you, I think, and which makes a lot of sense, is that the hindrances were in the form of, forget about the cultural hindrances, forget about the other hindrances, but the process was very cumbersome, and kind of like annoying for a female, right? So for an average female, a fintech is simplifying the process, which will basically would help in the financial inclusion of the female gender, big time.
Yep.
All right. So now, basically, like, we have talked about the financial inclusion as a concept, what's happening in Pakistan, the risks, the inclusivity in terms of gender inclusivity as well. So, the next question that comes to my mind is that if this is such a thriving industry, which is now, I can call it a thriving industry. So what kind of career opportunities are there? So Farooq, like, let me ask you, if you're sitting abroad and you're looking at Pakistan and, you own a stake as well in this whole game, how are you seeing the career in fintech? How does it look like to you?
Yeah, no. So I was saying that I think in terms of career opportunities, I think tech in Pakistan is getting interesting. For example, we track this a lot because we have hired a lot of fresh grads. One of the things that we noticed was that fintech companies and actually tech companies in general are paying slightly higher starting salaries than even some of the larger corporate employers in Pakistan, including some of the
Yeah.
multinational. Well, some multinationals that I think are still paying more, but like I think broadly speaking, the salary numbers are getting quite interesting. So that's, I think, a pretty positive development as far as the as young talent is concerned. I think what's also interesting is the extent to which equity grants are going to start to become normal, and I think that's going to get um, uh, that's going to change the nature of relationships people have with their companies, in the sense that it's not about there's this one person or family that is being served, but it's rather a collection of shareholders that are working together. And obviously, like, the founder tends to have a little bit more equity than some of the employees, but at the end of the day, it is a shared enterprise and shared effort, which I think is um, it's not alien to Pakistan. It does exist, but at the same time, it is very uncommon right now, and I think
Yeah.
it's going to start to get significantly more common. So it's a much more exciting time, I think, to start a career in Pakistan. I think there's a lot of people, and by the way, I say this as someone who, like, I got my green card in 2019, and I looked at it and I said, why do I even have this now? Because it felt like the moment had passed and the opportunity was in Pakistan to sort of go and build something interesting and exciting. And even now, sort of, I'm sort of thinking about, okay, how do I sort of increase my footprint in that country? So I think my advice to people is certainly, like, you are incredibly lucky to be born and starting careers at a time when there's never been a better time to start a career in Pakistan, I guess, is my point. And the other thing I'll say is, especially because I used to be a former financial journalist, I get asked this a lot, like, oh, what's going to happen with the government and all of that, does not affect your life at all. It should not affect, like, who is prime minister right now, what's happening to the rupee exchange rate, all of that in the macro scheme of things does not matter to your career and should not influence your career decisions. So that's just something that I think is important to remember. In terms of fintech, I think specifically, I think it's a really incredible opportunity. um, it's going to be one of the fastest growing segments of tech, and I think the one that has the most potential to hit cash flow break even, and therefore significant profitability faster than maybe some of the other sectors that are getting funded right now. I think e-commerce is going to have a lot longer of a period of negative margins before they eventually hit break even. I think fintech is going to get there a lot faster. I think Abhi, I think it's now public information, is already at cash flow break even. So I think it's kind of interesting, and I think a better bet than some of the other sectors.
Yeah, I can personally relate to what you've said, because, like, I myself, and I'm an American citizen living in Pakistan for the past 3 years, because I personally think that this place has a lot to offer. But at the same time, what you have mentioned is very important in terms of the equity, giving equity to the employees. I think there's in Pakistan it's not that prevalent, but for the employee retention, especially when the demand supply is such that there's more demand than the supply of these resources, if you want to retain them, I think equity is the name of the game. So I totally agree with that. The Towards the closure, I would like to ask, Ali, you. So if we have discussed all of that in a very, you can say, like, specific ways, right? But if I ask you to summarize, what are the basically pressing problems for Pakistan, for fintechs in Pakistan, and what are we as fintech, that fraternity of fintechs and the regulators doing to address those problems?
So Yasir, I want to be the every market have its challenges. Every market will go through some trends, and there will always be learnings. So it's about how you look at them. When there is a problem is where the opportunity really is. And I think just to sort of back my point, at Abhi, we were able to solve a manual problem that was there in society, where because banks were not providing credit to people, people were going to their employers and asking for advances. So we picked up on something as simple as this and said, hey, we could actually make a business around this. So it really depends on how you look at it. So it's essentially the story of the shoe seller who lands up in Africa. Nobody's wearing shoes, and he calls his boss and says, nobody wears shoes, so no opportunity here. And then on the other side, there's another salesperson that lands there and says, send me 10,000 pairs of shoes because nobody wears shoes here. So it really depends on how you look at it. And I think entrepreneurs need to always look at the positive side of things. There will always be challenges which are to be overcome by people like ourselves. From a regulator standpoint, I think the regulator is cognizant of the fact that doing business in Pakistan is difficult, and they are trying to give as much leverage to organizations like us to be able to come up with relevant use cases, and also just generally have a discussion around what problems and pain points we're having, for them to be able to make regulations and decisions that eases the pressure for us. So everything's hunky dory. Let's build.
I love the spirit. And I see you as one of those guys who are ordering the 10,000 shoes, right? So now the last topic that I would like to discuss, and I think where fintech can play a big role, is the SMEs part, right? So if I share with you, some stats that's coming from UK for a developed country where financial inclusion is already there to a large extent, right? Comparatively, if I look at the SME segment, the SME segment's contribution to the GDP, it is roughly around 80% of the contribution to GDP comes from the SME segment, whereas 20% of the contribution comes from the corporations, right? Big corporations. Whereas if I look at the lending in UK itself, so it is the right opposite. I think 13, 14% or 15% of the lending from the banks goes to the SMEs, whereas 80, 85, 87% of the lending goes to the big corporation because the risk that they see, right? So the reason why the banks or the financial institutions don't lend to the SMEs is because of the underwriting principles that they follow. So they have certain criteria, they have certain collateral requirements, that are required for issuing a loan, and also there's a high NLP, PNL, sorry, NLP. That's in my stuck in my head. So PNL. So there's a huge problem with basically non-performing loans that these SMEs. That's why they don't get the funding, right? So if I look at the fintech, I see fintechs as that area of opportunity that can tap into that SME segment and kind of revolutionize or revise the underwriting principles and be able to extend some lending to the SME and MSME segment. So I would like all three of you, starting Areej, Farooq, and Ali, to comment on this area. That what's your take on how fintech can help SME funding or lending in the SME segment?
So I think the really I would leave to the others because I'm not very experienced on that side. But I think in terms of supporting SMEs with other financial instruments, we're getting a lot of innovative solutions for them, and I think they're coming to the market one at a time. But for example, buy now, pay later is a big instrument which would help a lot of SMEs to, gather more consumers and amp up their business by quite a huge percentage. Similarly, I would also include freelancers in the SME segment because they also registered themselves as standalone enterprises. And for them as well, a lot of foreign remittances are an important service that should be offered to them, where it's easier for them to operate when they're sitting in Pakistan. So there are a lot of instruments which financial industries can, support small to medium enterprises, freelancers with, and we're getting there. I think Rust is also a very good initiative from that perspective. They're bringing in QR codes as well for payments.
Yeah.
So these instruments are also very critical in SMEs and their overall growth, in addition to obviously the lending and borrowing part, which I will let the others talk about.
Farooq, your take?
Oh, I have a lot of opinions about this, so I'm gonna try to keep it as brief as possible. So first of all, I think under the current regulatory structure, lending to SMEs is going to remain at best a small cottage industry. I don't think it has the ability to scale, and there's a specific reason for that. There are two very big reasons for that. One is something called the prudential regulations of the State Bank of Pakistan, which I think should be burnt to the ground. I hate them. They should cease to exist. And the second is the nature of the FBR. I oddly enough actually think that the FBR is an easier problem to solve than the prudential regulations. The FBR is basically a problem because it's very difficult for small and medium scale enterprises to register themselves. They don't want to be in the formal financial services sector because they're not documented now, and the process to go from undocumented to documented is the gatekeeper there is the FBR, where they will start asking you a ton of questions for which most people don't have really good answers, even though nothing illegitimate happened. They didn't murder anybody, they didn't smuggle drugs or anything like that. They just had a business that didn't have documentation, and now they want to document it, and the FBR will simply not let them in. So people decide, you know what, I'm just going to stay off the grid. I think that's a solvable problem. I think we can eventually get there. I think we can work with the FBR on some tech solutions that could get you to a basic enough level of documentation that people could meet, but at the same time would satisfy FBR requirements, and we could get there. The bigger problem is state bank prudential regulations, very specifically the sector limits that they set up within the prudential regulations, which now this sounds like a very arcane kind of thing, but hear me out as to why this is important. The reason why this is important is because the way fintechs will start becoming more effective at lending and underwriting risk is if they are able to build specialization. Let's say I am a fintech, I lend to, let's say, small scale textile sectors, or to small scale, like rice exporters or something like that, right? Like it's a sector specialization. Under the prudential regulations right now, sector specialization in lending is virtually impossible, because you are required to not lend to a particular sector beyond a certain level. You're required to keep your exposure limits relatively low, which means you can't specialize, which means you cannot develop the sophisticated underwriting models, the expertise that you get in being able to underwrite a loan faster to a particular area of the economy, because the state bank has kind of assumed that all lending will be done by banks, and all banks are generalist banks, and so by definition everyone has to try to be like Habib Bank, which is just an unreasonable expectation. That needs to change. Now, the state bank has a good argument that says that, look, this is safer in terms of lending, and at the end of the day, they are custodians of people's deposits. And so you want to be responsible with people's deposits and not put them at risk. It's a fair argument, but I still think that they should find a way to experiment with this kind of specialization. And until they do, this is, like I said, it's going to remain a cottage industry. I don't think it has the ability to scale without the SPP having a significant look at how they regulate this.
I think that's a very good point. So basically, your take is more towards the regulation, and until that happens, that not a big dent can be made. Um,
I think we need to work with the regulators to at least try to allow some experimentation. I think ultimately the regulations will get there,
Yeah.
but we need some wiggle room here.
And when we're talking about the underwriting principles or collateral, so for example, if I go to a small business or MSME segment, and if they are asking for a loan or so I can take the inventory as a collateral. There's so many other ways of looking at it, but I agree that some experimentation needs to be allowed by the regulators at a small scale with some chosen fintechs, for example. And if the experiment is successful, then just make it a rule.
Yeah, and SPP equivalent of the sandbox that the
Yeah,
SCCP already runs. Yeah.
exactly. No, that's a very good point. And Ali, your take on that?
So Farooq does have his views on it, but I think we need to realize that at this point in time there is nothing existent. So if you look at us as Abhi, I didn't need to go in and give people very large credit limits for me to be able to service them. Um, you need to understand that consumers in Pakistan have understood the boundaries in which they can play, and therefore have created their behaviors accordingly. So a small sort of initiative actually has a large impact. So for example, somebody who's a factory worker today could never have gotten the service that Abhi gives to them. I'm not doing anything very extremely different. I'm just letting him or her be able to access the earned wages. And it's really changed the kind of feedback that we get. It's really changed the way people are using our services. So just to give you an example, for so at the moment, organizations that work on a 30-day pay cycle, if there is a delay, the customer ends up paying an 8% late payment on their utility. By accessing their wages early, they can actually save all of that. So that's an overall significant impact, where if you're paying six bills, you end up saving 2-3 thousand rupees there. So I think we have to. There is a route that needs to be taken. The idea is, having been a banker, the regulator back in 2008, when credit cards really started looking, really started sort of taking off in Pakistan. There's a very bad, situation that did happen. And I think it's not just the regulator, the banks themselves have also become very scared of going into new territory. So it's up to fintechs like us to slowly and gradually creep in. And I think the regulators will open up. It's happened around the world. It's not just us.
Right.
Brazil, you look at Mexico, you look at India. So we are on that path. It is going to be a long journey, but I think because the regulator is looking at other examples around the world, they're cognizant of it, but they need to have enough of a use case for them to be able to say, hey, as Farooq said, burn the prudential regulation.
Now,
But so, Ali, just one quick thing though. I think, like, look, you are SCCP regulated, you're not SPP regulated, right? Like, it's a slightly different framework that you're operating under. And I think there's a reason you chose that, right? You wanted the flexibility that you have now. So I think something like that could be sort of a tool to use to keep on encouraging those experiments.
Yeah, see, we've had great, like, I'm not just putting this as a word out. The SCCP has been very favorable. Listening to us, discussing the use cases and so forth. So I don't think the regulator is to be blamed as much. Again, like I said, there have been instances where there have been mistakes by organizations, and therefore that's when the regulators had to step in and say, uh, take it easy here. But I think once we have good enough use cases, whether it's the SCCP or the SBP, I think they listen, and I think they will open up. It's happened on the payment side, right? They've become comfortable. Now you've got a lot many more payment companies. On the EMIs, look at the number of EMIs that are now coming up. So it will happen. It's just that we need to present enough of a use case for them to be able to look at it from that perspective. At least that's my thought.
That's fair enough.
Thank you, Eddie. So basically, like now, I would like to just summarize because this, I'll remind our audience that the topic for this episode, which is the second episode of our Tech Talk season one, was the fintech and the financial inclusivity in Pakistan. So there have been very deep discussions. So if anyone who have listened to this episode, I'm sure you must now understand what the fintech means. How is the fintech seen in Pakistan? What kind of financial inclusivity are we aiming for in Pakistan? How does it impact, the females in Pakistan, or how it would impact the females in Pakistan? All the more reasons to support financial inclusivity in Pakistan, and these are all exciting times which are happening right now. And we have some good examples from abroad, like India, like China, and other Brazil, Ali mentioned. So, we can learn a lot from them, and we can, rather than going through the evolution as I shared, from a black and white TV to a LED screen, we can directly go on the LED screen of the fintech and try to, do it our way, which basically addresses the problems in Pakistan. So I thank you all for your precious time, and I look forward to having another episode with you guys some later time. Ali, I've met already personally. Farooq, you and Areej, I would love to meet you in person as well. Thank you for your time again.
Thank you.
Take care.